wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we are trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Live from New York City for our audience worldwide, 3 days of gains into Friday on the S&P 500. We're set to add some weight to it on a week of gains. So far, your equity market up 21 points on the S&P, advancing 0.5%. A similar story on the NASDAQ there, up by 0.48%. And likewise on a Russell, bouncing back after a rough ride more recently, advancing there by 0.7%. Helped out by the earnings. The numbers so far terrific, but that alone isn't enough. It's how the market responds to those better numbers, and you see that in Twitter this morning, advancing by 5-6 percentage points. If Twitter can do it, why can't Facebook? We raise the bar going into the numbers next week. Tuesday, Wednesday, big couple of days for big tech in America. Alphabet, Google up 0.8%, Facebook up by 2.9%. Keep an eye on that. The earnings have set the tone for the equity bulls. For everyone else, what's setting the tone right now is the bond market. Let's finish there. Switch up the board. Your 2s, your 10s, your 30s. We look like this. Yields are higher again by a basis point to 129.14. Yesterday, we had a look at 131. What on earth are we trading on that deserves a range of 112.60 at the lows on Tuesday morning and 131 on the highs on Thursday afternoon, Tom? What on earth has been driving that when there's been very little data in between? It's been a blackout period for the Fed ahead of that decision next week. So we've had no Fed speak, very little economic data to trade on, and a bond market just doing its own thing, apparently.
The bond market is a beast of its own. Again, the 2s10 spread 109 basis points. That was below 100 basis points here not too long ago. And again, we're looking at earnings maybe as a separate beast into next week as well. Right now, a really important conversation and an appropriate conversation for summer. Long ago and far away, Carl Brunner and Alan Meltzer set up summer conferences. I will be direct, they invented the economic summer conferences. And the detritus of that has been the Shadow Open Market Committee, of which Mickey Levy has been a member for near 40 years. He of Bank of America, now at Berenberg Capital Markets, is their chief economist. We are thrilled that Dr. Levy could join us this morning. Mickey, there has to be a fear, a singular fear, of the many shadows of our debt and our deficit. Except life seems great. How is that?
It's really quite striking how the public, the financial media, and financial markets seem to be ignoring the dramatic increases in the debt and not really questioning what its consequences are. Particularly, Tom, it's not just the piling up of the debt, but it's also, what are we deficit spending for? Are we allocating resources in a way that's adding to, productive capacity? And, I think let's get down to basics. One way or another, we and future generations are going to pay for it. We used to think it was all going to generate higher inflation and higher interest rates. It hasn't. that doesn't mean it's good. Once again, it gets to the point, how are you allocating national resources? And, it's going to lead to slower growth in the long run.
What would Carl Brunner and Alan Meltzer say about the two Americas we've been dealt, not only off the financial crisis of 2008, of which you were in the crosshairs of, but also this natural disaster we have? What would Brunner and Meltzer say would be a prescription across all of economics to get us out of this mess?
Okay, one thing they would say is coming out of the current situation, the pandemic, the economic situation is completely the opposite of coming out of the financial crisis. It was the proper role of the government to provide income support during the pandemic, but now you don't need any more fiscal stimulus. You've already rebounded back, and you need to move back to normal, both in monetary policy and fiscal policy. On fiscal policy, they would completely agree with the notion that you need to allocate more resources to infrastructure that is really needed, but not more to stimulating the economy, which is not needed.
Mickey, you want us to focus on the debt pile, so let's do that right now. Why is it a mess to you? What is messy about it?
Well, I wish our policy leaders were actually debating the issues in a rational way. All we hear about is the number, $1 trillion for the infrastructure package. Also, the infrastructure package, please note, is called the American Jobs Act. It should be called the Infrastructure Act with an emphasis on infrastructure rather than creating jobs. There is little discussion at all about how the resources are going to be allocated, who's going to administer the projects, what projects are needed. That is, we should really be thinking strategically about how to upgrade and improve our infrastructure. Also, as you've noted, the infrastructure initiative, the American Jobs Act, is being tied politically to the American Families Plan Act, which involves a couple $1 trillion in various income support programs. And holding that hostage to more fiscal stimulus is just not constructive. And so we need to disentangle the legislation and have our policymakers address what is really needed at this time. We do not need more fiscal stimulus to create stronger economic growth. That's the old battle.
So, Mickey, your issue then is not the additional dollar of debt, it's what that additional dollar of debt is being used for. Is that a fair characterization of your position?
Oh, I think it's a combination. I mean, whenever you have the government debt to GDP rising above 100, you should be concerned. You should also be concerned when the Secretary of the Treasury says, the Fed is keeping rates at zero, so now's the time to spend more. That's not wise strategic thinking. So I'm concerned about the rise in the debt per se, but I'm also very concerned about what we're deficit spending for, and does that, quote unquote, pave the road for increasing productive capacity in the long run? Because it's the continued increase in growth in the future that allows us to finance or the debt service, and also raise standards of living.
Why isn't all the spending leading to inflation?
Well, it will. I mean, the risks are inflation is going to go up. So let me put it in a nutshell. Inflation has already risen significantly higher than the Fed had earlier predicted it would. Certainly, some portion of the rise in inflation is temporary as these supply constraints and supply bottlenecks dissipate. However, you have seen an acceleration of aggregate demand. Okay, now the critical issue is, after this initial spurt in economic growth as the economy reopens, following that, if all of the monetary and fiscal stimulus in the pipeline, which is unprecedented, if those policies actually stimulate stronger aggregate demand as they are supposed to, then you're going to end up with excess demand. And if those policies fail to work,
Right.
then you're going to have the economy go back to where it was, and most of the inflation will prove to be
Right.
temporary. But, the critical point is the risks are for inflation to rise, and there's no question but that the higher inflation hurts lower income people the most. And what the Fed is doing is it's really accentuating income and wealth inequality, and it's really
Mickey,
not stimulating the economy.
Because of time, I want to get you in trouble with Berenberg in Germany. Tell me about the new Bundesbank from where you sit, and after watching Lagarde yesterday and the revolution of the ECB, is this a new Bundesbank?
Compared to a decade ago, of course it is. The ECB, when it was founded, was the Bundesbank was in the driver's seat, and it held to its old precept of stable money and stable price levels, and now the ECB is it's in an awkward situation, but it's all about financial stability and continuing to ease and continuing to have its eye out on the weak links in the European Union. That means continuing with its QE and negative rates. And so, yes, and of course, under Lagarde, they've expanded the scope of the objectives of the ECB to include climate change, some credit and distributional issues. So yes, it's a different policy making body than it used to be.
Mickey, it's good to catch up. Just a flavour of the heritage of Berenberg there with Mickey Levy and Holger Schmieding on the other side of the Atlantic. Mickey Levy there of Berenberg. Tom, the issue that I think the Hawks have right now over in Europe is we all want to get back towards 2%, but do we really want to argue over 20, 30, 40 basis points and have this long-term commitment to extraordinary policy of deeply negative interest rates and QE forever? Because that's what's happening here. And I keep going back to what that PEP program is. The E in PEP is emergency. And what President Lagarde did not give people what they wanted to hear yesterday was how they constitute the end of that emergency. Right. And we haven't got anywhere near to describing that.
Johnny, I did the Ibbotson chart going back to before the Depression with Francine this morning, Roger Ibbotson's wonderful chart from Yale University. John, the thundering silence of this great disinflation has been how we haven't been able to get near an academic construct of 2%, pandemic crisis, whatever, and that there's a rationalization out there about potential GDP under 2%.
Next round of forecasts from the ECB, they will be very interesting.
Fed. Yeah, well said. Yeah, and the Fed too.
1.4% for 23 rather.
I'll let you forecast.
1.4% on CPI. That's not mine, Tom. That's for the ECB.
I'm going to forecast. You have to watch Ted Lasso the whole season.
The whole season this weekend.
Before you watch season 1.
And I'll come in Monday morning unprepared. Yeah, how's that?
I believe.
That'll be two of us. On the S&P up 21. We advance a half of 1%. Yields 128.97. This is Bloomberg.
With the First Word News, I'm Laura Wright. Talks between the European Union and the US on vaccine passports are making little progress. Bloomberg's learned that's because there's no federal certification program in America. The EU launched its COVID pass at the beginning of the month. The bloc is at an advanced stage of talks on the vaccine passport with the UK. Colony Capital founder Tom Barrack is back in federal court in Los Angeles today. The Trump ally will learn whether he will be released on bail after being charged with illegally lobbying for the United Arab Emirates. Prosecutors say Barrack is a flight risk. His lawyer says he's not guilty. The state of Mississippi has asked the Supreme Court to overturn the constitutional right to an abortion. That raises the stakes in a clash the justices are set to hear in their upcoming term. Mississippi calls the 1973 landmark Roe versus Wade decision that legalized abortion egregiously wrong. Intel says the worst of a semiconductor sales slump has passed, and CEO Pat Gelsinger is sounding bullish about the chipmaker's prospects for the rest of the year. Intel's most lucrative business, server processors, picked up in the second quarter from the first. Still, investors worry that the division's 9% decline in sales may signal a long road to recovery. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I've always sort of pictured what it was going to be like. I mean, you know, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid.
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have a similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that, you know, two kids for, you know, just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many people to be able to go up who could never have dreamt of going to space.
Billionaires in space?
What defines going to space?
There is a level where you
It's the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Recognize how very difficult this has been, and we come here humbly and with respect for our Japanese hosts. And again, We will follow every protocol. We will follow every rule to ensure that this is a safe and secure games for everybody.
That was Suzanne Lyons there, the United States Olympic and Paralympic Committee chairperson. And I have to say, a very different mood going into this event compared to the Euro Championships just a month or so ago. From New York City this morning, good morning. Alongside Tom Keane, I'm Jonathan Ferro, together with Taylor Riggs. Lisa back with us on Monday. Here's a flavour, a taste of the price action, up 21 on the S&P, advancing around about 0.5%. Into the bond market, yields are higher by a basis point or two. 129.47, had another little look north of 130 earlier, just south of that level now. Euro dollar unchanged at 117.68, and crude just slightly softer, negative lower, Tom, down 0.25% to $71 and about 70 cents.
There's a lot of statistics out there, John, on cases, hospitalizations, and death. I'm not sure what to make about them as an amateur. Let us speak to a pro here. And the emotion of this third leg of the pandemic. Andrew Peckhoff joins us now from Johns Hopkins. Andrew, John Farrow mentioned Louisiana is particularly difficult. Louisiana cases are back to February 2nd. California is back to March 2nd. Do you as a pro care about the case increase, or do you still consider hospitalizations and deaths?
I think both are important. I think it's even more important to emphasize the fact that the vaccines are protecting against the severe disease and the hospitalization that was really driving such a crisis in our medical community during the peak months of this pandemic. Case numbers are important to follow because we want to make sure that we want to follow the case numbers in vaccinated people and compare it to unvaccinated people to really figure out what's driving the infection. So the most important number is really disease severity, hospitalizations, and protection from death. But case numbers are important because the more this virus replicates, particularly this Delta variant, the more likely we're going to see more variants emerge from it that might be better at infecting people and perhaps eventually getting around the vaccine immunity.
Explain to the unvaccinated the disease severity of, say, a 32-year-old admitted to the Johns Hopkins Hospital this morning.
Well, you know, early in the pandemic, there was some feelings that if you were young and healthy, you were much, much more likely to have a very, very mild disease. We're seeing those numbers increase very, very significantly. And vast majority of people that are hospitalized right now are under the age of 65. So that population that initially thought that their disease severity was a chance of severe disease was very low, that's starting to creep up very significantly. And so this virus, particularly this Delta variant, is changing the course of the disease and the age groups that are susceptible to the disease. Now, we're not at the levels that we saw in the winter because we've protected the most vulnerable portions of the populations with the vaccine. But if you're young, you have a much, much greater chance of getting severe disease now if you get COVID-19 than you had at any other part of the pandemic.
Professor, I want to work through some numbers with you. This came from Israel's health ministry. And the number that a lot of people will hear this morning is the number 39%. 39%, the Pfizer-BioNTech vaccine effective in preventing infections. What is often in the next paragraph is the more significant information. The number 91%, 88 to 91% protection against severe disease. And Andy, I think emphasis matters here, and I cannot believe that 18 months into this mess, we're still reporting things the way we are reporting things right now. Surely we need to focus on the latter and not the former. Andy, do we still have an information problem, an emphasis problem in the way that these numbers, this data, is delivered to the public?
In some ways, I think we do. The Israel report is also a little bit interesting from the perspective of their protection number against symptomatic disease is much lower than numbers that we're seeing coming out of the UK, out of Canada, and out of the US. So the commonality across all of these studies is that there's 90+% effectiveness against severe disease if you're vaccinated, and that's against the Delta variant. When it comes to symptomatic disease, the numbers seem to vary. Israel's coming up much lower than other countries, so that needs to be investigated. That may be telling us something important about the immunity from the vaccines, but at the end of the day, it's protecting against severe disease that is the critical issue, and the vaccines continue to perform at an excellent level against that parameter.
Do we need to follow Los Angeles in mandating masks indoors even for the fully vaccinated?
you know, it's a question of risk. When you're vaccinated and there's not much virus in the community, masks really don't add much to your protection. But if you're vaccinated and you have a lot of virus in the community, then you have a chance of getting symptomatic disease. The data right now is showing that even if you get infected when you're vaccinated, you're probably less likely to spread the virus, but it's a question of risk. And if you have a lot of spread of the virus in your community, I don't think there's anything wrong with wearing a mask to have that extra layer of protection, even if you're vaccinated.
And I guess the bigger question right now is whether that should be mandated or whether that should be individual choice. As you pointed out, we've done a great deal in this country to vaccinate the most at risk. Do you think we're at the point now where this is about going back to where we were before, shifting the goalposts again and saying this is about protecting the healthcare system, or is this about individual risk?
Yeah. You know, my personal opinion, we have so much data on the safety and the efficacy of this vaccine, particularly the mRNA vaccines, that these vaccines should be moved into full approval by the FDA, and then we should really institute much greater vaccine mandates across this country. These vaccines work. These vaccines are safe. They are the path out of this pandemic. And we just have to get better at giving these shots to people and getting people to accept them, because they really do work despite the misinformation that is out there and being spread like wildfire on social media.
And Andy, as much as we like each other, I know you and I both can't wait to stop talking to each other on a weekly basis about this issue. Andy, it's good to catch up. We appreciate the hard work. Thank you, sir. Andy Pekos, Johns Hopkins University Bloomberg School, a public health professor and virologist. Tom, I mean it. I know you mean it too. I can't believe we're still here, July 21, having the same conversations.
We're still here, and I'll be honest, it's going to be an interesting weekend. There's some serious issues out there. Just on a micro basis, some of the kids off at camp in New England here in New York, and I'm sure that's a nationwide story, and the stress is on essential workers. But John, you brought to my attention the explosion in Louisiana of cases. I've got to see how that folds over into hospitalizations.
Well, I can tell you,
these are real numbers.
They've almost doubled in a week.
Yeah.
And those numbers aren't pretty.
They're back to February.
And Louisiana is the third lowest state, the third lowest amount of vaccination, the third lowest rate of vaccination in America among states here. It's not good enough. It's going the wrong way. And I think at this point now, Tom, it's about, for markets at least, because we need to have that conversation on a program like this, how do consumers respond?
Yeah.
Do they lose some confidence? Haven't seen big signs of that just yet. How do corporations respond? Do they start to delay the return to work in a more material way in this country? That's going to be interesting.
Buried in the news flow, the National Football League, John, this is the American Football League, said basically if your guys get COVID and you have to forfeit, you lose the game.
I saw that.
Yeah.
Coming up, Stuart Kaiser on this equity market, UABS head of equity derivatives research from New York. Equities with a lift, up 0.5% on the S&P 500, advancing 21 points. From New York, Tom Keene, Jonathan Ferro, Taylor Riggs. This is Bloomberg.
Is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
For the people here on Earth who are wondering, why are we investing all this money in space, this time in space, talk to us about how you believe this will actually help benefit us here on Earth.
We're building infrastructure. This is a road. We're building a road to space so that future generations can build the future. We live on this beautiful planet. It's the most beautiful planet in the solar system by far.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg Surveillance puts global markets into perspective.
We're going to try to fold in economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
We have an economy that's going to continue to grow, but the largest gains may be behind us.
Almost everything has told us here that we're in a regime shift. We're going to now see growth decelerate and inflation decelerate.
We are going to see a deceleration in growth, that's for sure, but I think the U.S. consumer will stay quite resilient.
The recent move is overdone. You're going to have a push higher for the remainder of the year.
You're not going to see deceleration until sometime into next year. There is still plenty of room for the economy to run.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
We are ending the week with a lift from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Together this morning with Taylor Riggs. Lisa back with us on Monday. Your market up 21 on the S&P, advancing 0.5%. Tom, 3-day winning streak into Friday. We could add some weight to it.
Yeah, the equities really delink. I mean, bonds half asleep here. The 10-year yield 1.29%. But equities have a life of their own. And, the bottom line, I think Taylor's better at this, John, than I am. Earnings are speaking volumes.
Amex with numbers right now, Tom.
Look at their revenue.
Upside surprise, 10.24 billion revenue. The estimate 9.64 billion. And Taylor Riggs, the numbers yesterday afternoon, just as good.
Unbelievable. I think Rohit Kulkarni of MKM Partners has the headline note of the morning saying Snap defies gravity. It's a beat and a raise. That pretty much just sums it up as people are taking a look at the difference between Snap and Twitter follows at a slower pace. Snap, they're saying, has just been set up for a decade-long cycle.
Fast forward to Tuesday, Tom. Apple, Microsoft on deck. Big tech, big earnings kick off.
Well, a reset there. Anurag Rana, who's really quite good at Bloomberg Intelligence, just walks through the revenue dynamics of Microsoft. This is a small company out in Washington State. And John, Rana says of Microsoft simply the fourth quarter revenue mix, if you will, he's got an above consensus view on that.
That stock year to date, Tom, has absolutely flown to the moon. Up almost 30%, positive 28.65%, and on course for a 10th consecutive year of gains. What a turnaround, Tom. We often reflect on that. What a turnaround of that company.
Yeah, let's review this, John. I think it's a good point to stop here on a Friday. We're trying to reframe for the week. The big missed call so far this year has been NASDAQ. It's dead. It's over. It's done. Don't be in big tech. And I don't know, John, when was it? 6 weeks ago, like a switch, it went off.
Oh, yeah, a couple of months ago. All-time highs coming into the session this morning. Here's a flavour of the price action right now. The S&P up 21, advancing 0.5%. We'll talk about the Russell in a moment, Tom. The small caps with a nice little lift over the last couple of days as well, bouncing back from an ugly few months. Outside of that, into the bond market, yields are higher by about a basis point or so. Still south of 130. Had a little look at 131 yesterday, 130 again today, 128.80 right now. And into foreign exchange, Taylor euro dollar 117.65, negative 0.05%.
And how much does that fold into some of the morning briefs that we're continuing to look at, starting at 9:45 when we push forward to some of the PMIs? Remember, last time you had a composite reading of about 63.7. Look for services at 64.5, manufacturing manufacturing at 62, coming off the lows of June 2020, but how much of this is really bringing up those calls of peak growth that might be behind us? Let's find out as well when we push forward to 1 p.m. We're going to get the Baker Hughes rig count. There's been a lot going on. I think Arabica coffee is now above $2 a pound, but if you take a look at the oil markets, a little bit of a different story as we're trying to figure out where we are at about, well, 48, 78, $68 a barrel as I try to catch my words. Let's change up the board and go back over to Tokyo Olympics. John, it was John Bale at the top of the last hour saying that the mood is pretty sour as you take a look at where we are within the Olympics. Unfortunately, some of it's already kicked off and there's been a lot of controversy and you really wonder if this year is different.
And John sounded very upset, didn't he, Taylor?
Yeah, sour
Would
mood.
would you say that our guest sounded sour? Would you go that far? Sour, grumpy.
Sour mood.
Not happy about these Olympic Games taking place in his hometown, that's for sure. Taylor Riggs, thank you very much. We're at a pivotal point right now for this pandemic, for the surging cases, for policy, and for the outlook too. Let's talk about downgrade risk with Stuart Kaiser, UBS Head of Equity Derivatives Research. Stu, Q1 was all about upgrade risk. And now I'm just wondering whether we're at that inflection point, thinking about next year and maybe bringing things in just a little bit and trimming. What is your take, Stu?
Yeah, look, good morning, Jonathan. I think the risk here is to some degree downgrade risk, and also just, we had a lot of very good news priced into the first half of the year. Growth was both stronger and earlier, I think, than a lot of folks expected. And now that you have the Delta variant kind of popping up, I think people view that as a potential headwind on global growth, which could, of course, ultimately lead to some downgrades in U.S. growth as well. So I think there is that risk there. You have a natural just sort of slowing in sequential growth. You're not going to keep growing at 10%. And now you could argue you do have some headwinds that, at bare minimum, probably put a little risk reward around that number and could definitely lead to some downgrades. And you mentioned Snap before, kind of beat and raise story. I think, the U.S. economy was a beat and raise story for a really strong period of time. And if you go from beat and raise to just beat and you don't raise, sometimes investors don't like that either. So I think that is definitely an underlying risk in the market.
Well, let's talk about where to park the cash and make it as simple as we possibly can. Got the Russell on the one hand. Tom pointed out the recent gains we saw in the Russell Tuesday, Wednesday. Nice rally. Yesterday, not so pretty. You've got the Russell on the one hand, the NASDAQ on the other. What would you be sitting in now through to year end? NASDAQ 100 or the Russell?
I think at least tactically, we're still in the NASDAQ side of that camp, at least through earnings. We viewed small cap, frankly, for the last few weeks as the area you wanted to be hedging in. So, and I think until we get enough confidence that the global growth hit is not going to be too strong, from what we're seeing from a Delta variant perspective, I think we'd probably stay on the NASDAQ, side of that. And real rates in particular are something we've got an eye on. Lower real rates obviously would generally read positive for equities, but I think they declined so far and so fast that it started to, raise the question of why. And I think we like at least some answer to that question of why before we got too excited about getting back into that cyclical small cap at this point.
Stuart, on derivatives and on the cross moments, so I put kurtosis in here as a joke, but, more on skew. What do they do when there's a lack of breadth? We can clearly identify there's minimal breadth in this market. What does that do to the derivative dynamics?
Well, Tom, look, I think it raises the risk of a pullback. People get uncomfortable with the sustainability of the rally, and that's definitely going to push the cost of hedge protection higher. And I think there's a number of things at play there. The first is this global growth story. The second is the event risk and the fact that the Fed sort of introduced two-sided policy risk into the market, last month. And yeah, in our view, that's going to keep skew elevated and implied volatility elevated, but probably more so in that 3 to 6 month space. Yeah. Whereas the front is going to still continue to be driven by short-term market performance.
So to translate that, what's the street bet right now out 3 to 6 months?
The street bet, look, I think the street bet 3 to 6 months out is, cautiously optimistic or, trust but verify. And what you're seeing there, I think, is a positive move, generally speaking, in U.S. equity markets. We're near all-time highs, but volatility and skew is high. And I think that's telling you people are willing to own it, but they want to verify that these risks are not going to come home to roost. And for that reason, that's why you're seeing that skew stay high, in my opinion.
Stuart, are we hedging and where then?
Yeah, look, I think right now, given the signals we're seeing from the bond market, it's prudent to have some hedging on. We have been pointing people towards small cap U.S. equity because, we thought that was the part of the market that was most vulnerable. It's gotten a little expensive to hedge there. So I think you could, just make the argument to just hedge an S&P and not get too cute with it. But I think you are, you're hedging in the equity markets, and we think small cap is the best place to go based on its exposures. So probably small cap or S&P is where you're doing that. And, we're seeing most people keep that relatively short dated because that longer term hedge protection is so expensive. They've been kind of forced to keep it fairly tactical.
Can you hedge with a 10-year to 128?
Well, and honestly, that's a huge question here because the correlation between bonds and equities is sort of at a transition point. And I think a lot of investors are now asking, are bonds actually a hedge to my equity portfolio? If they're not, that means you have to hedge equities within equities. And the natural implication there is that pushes the cost of hedging and skew higher. So, it is sort of a circle you get caught in, sort of a negative feedback loop. But, we'll see how it goes.
That's a great Friday conversation. John, I've never observed, does anyone hedge the Dow Jones Industrial Average?
I'm not sure. Is anyone allocated to the Dow Jones Industrial Average? Stuart, do you want to weigh in on that? Tom and I, and this debate that we continually have over who's actually allocated to the Dow and whether we should even talk about that index anymore.
Going to plead the fifth on that one. I would say I haven't seen the Dow hedge go up in quite some time. But if it matters for Main Street, it matters for me, guys.
There we go.
Oh, Stuart, don't let me down. Okay, Stu, let me put you on the spot. Do you have a Dow forecast at UBS? Does one exist year end?
Higher? No, we do not have a formal Dow forecast. I'm sorry to say.
I'm not going to let this go. Stuart Kaiser of UBS, Head of Equity Derivatives Research. Thank you, Stu. Tom, I'm with you. It sets the mood of the country. My view is that it shouldn't, but there we go. The equity market up 20 on the S&P. We're advancing 0.4%. There's a lift again this morning, Tom.
Yeah, what does Taylor Riggs think about a show where we can make jokes about skew and kurtosis? I mean, they don't do that on the close.
I think they probably do, Tom, if you tune in sometimes. Taylor?
Trying to do more skew and kurtosis.
Are you trying to make it happen?
That's all I'll say.
Yeah? You're getting pushback?
Yeah. These are really important
Sounds
things.
like Taylor Riggs getting
folks.
pushback,
And,
Tom.
of course, I always push back from Taylor Riggs, but these are really important things to the pros, folks, because what they're doing is they're hedging and bringing in premium or money to make their trades more cash effective, where they don't put a lot of cash out. That's the way the game's played, John.
Well, let's try and make the moment that we're in as simple as we possibly can. Rochelle Walensky, Tom, the CDC director, came out yesterday and said that we're at another pivotal moment in this pandemic. And I would go one step further, not just the amount of cases that we're seing, but for policy and the outlook as well. And we touched on it there with Stuart Kaiser. After seeing this huge upgrade, this flurry of upgrades through Q1, we have that moment now, Tom, when we approach September, October, and we start thinking about, okay, show me the money, show me the data. Been waiting for this moment, Q4, the end of the year, when the additional UI expires, the return to school is set to take place. Once we start to see that data, that's when you can really start to shape a view on 22 and beyond.
That's a belief. And Michael Purvis says he's enthusiastic about Q4, which is how he gets to Standard & Poor's 4,800.
We'll have that debate in the next hour with Sam Stoffel of CFRA, the Chief Investment Strategist from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro, together with the wonderful Taylor Riggs. Your S&P 500 up 20. We advanced 0.45%. And in the bond market, Tom, just south of 130 at 128.47. This is Bloomberg.
With the First Word News, I'm Laura Wright. A bipartisan group of U.S. senators is closing in on a $579 billion infrastructure deal. They agreed to pay for it in part by delaying a costly Trump-era Medicare regulation. Details won't be announced until at least Monday, and any deal could face opposition from Democrats in both houses of Congress. The head of the CDC says the U.S. is at another pivotal moment in the pandemic. Rochelle Walensky says COVID cases are once again climbing and beds at some hospitals are filling up. The government says that by the second week of August, the number of new cases may be up 39% from last week. A new survey says the Fed will start scaling back asset purchases next year, and policymakers are likely to put an emphasis on mortgage-backed securities. Economists surveyed by Bloomberg see the Fed raising interest rates at a quicker pace through 2024 than previously thought. Most also expect Chairman Jerome Powell will be nominated for a second term. Carlyle Group is seeking to raise as much as $27 billion for its latest flagship fund. That would be the industry's largest ever private equity pool. Bloomberg's learned Carlyle is in discussions with investors about the size of the fund. It's likely to include a strategy for growth-focused companies. And we know what Tom Keene will be watching this weekend. Yes, Tokyo Summer Olympic Games formally gets underway today, a year later than expected, and with no spectators in the stands. The coronavirus has been the latest and biggest challenge for the event, but not the only one. The Tokyo Olympics has been marred by everything from a scrapped stadium design to a bribery probe. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm right. This is Bloomberg.
Estava há um ano sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem para os amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
I'm Alex Steele. It's a new race into space with billionaires, governments, companies, and investors all driving the industry.
Ignition, we have liftoff. Space is what allows you to see over the horizon.
We're going to see another incredible leap.
The opportunities here are massive.
Join me and Ed Ludlow for Space Race, a Bloomberg Television special report.
Friday on Bloomberg Television and Bloomberg Quick Take.
This week on Bloomberg Green, moving on from oil.
They stand to lose somewhere, my guess would be on the order of $4 billion. All of that is kind of like the sunk cost of just trying to do the project.
Adapt or die. After the cancellation of the Keystone XL pipeline is a multi-billion-dollar industry facing extinction.
I think more needs to be done to move the planet on to cleaner forms of energy, and we certainly in Equinor believe we're taking the lead on that.
Big oil becomes big energy. We speak to one of the first companies to publicly start the transition to renewables.
Thousands of wells in the Permian, tens of thousands. How many of those are going to collapse? Even if it's only 1%, that's 100 wells that are going to pollute aquifers and destroy huge swaths of land.
And millions of oil wells lie abandoned across the American South. Whose responsibility is it to clean up the mess? I'm Kaylee Lyons in New York, and don't miss this edition of Bloomberg Green, airing this weekend on TV and Quick Take.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astracoma carinata.
I nailed it.
It's not thera, whatever. Astracoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio. The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance. Weekday mornings on Bloomberg Television and Radio.
position where the United States invested more money in research and development 3-4 decades ago than any nation in the world. Now we're number 8. We have to win the competition for the 21st century. That's really what's at stake.
The President of the United States from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro, together with Taylor Riggs. Lisa coming back to work, I understand, on Monday. This is the price action this Friday. Good morning to you all. Your equity market with a lift once again. 3-day winning streak into Friday. We add some more weight to the S&P, up 19, advancing 0.4%. Outside of that, yields just a little bit higher on a 10-year to 128.47. I get my words out, Tom. Up about a basis point on the day. Switch up the board and get to a stock to have a look at. DD, absolutely getting crushed. Can we say crushed if you're down 10%? I think we can.
I think we can, yeah.
Down 10.39%. And coming into Friday, Tom, down 26% from its IPO price. Just pretty ugly out there.
Yeah, from the peak, I think it's like a 35% move. And John, I wonder what the ramifications are, less for the Chinese, but much more for the American banks that efforted all
Yeah,
this.
Tom, look, I don't know much here, but the questions are as follows. What did they know? What were they told? And what did they not disclose to investors ahead of this IPO? They're the answers we want to hear.
Yeah. One other thing I'd note on the equity markets, John, the VIX gives me a 16.98. That's a big deal in this bull market.
Well, especially from where we were. Where were we, Tom?
25.
North of 20?
25. We come in 9 big figures off the growth scare. You remember the growth scare?
I remember it. I remember you calling the end of the growth scare. Are we done?
Yeah, we're done. I was less great. I missed my window of opportunity to get into the market.
Well, looking at those earnings, it looks like we're done, Tom.
Yeah.
Those corporations, the C-suite, seem pretty optimistic about the year ahead of us.
Edward Hyman with us later, our conversation of the day, and we're thrilled to bring you Peter Hotez on the pandemic as well. Right now, from the White House, Mario Parker joins us, Bloomberg White House reporter. Mario, I want to go not narrow here. I want to go bigger. What's the mood at the Biden White House? I think the nation was riveted by the mood of the Trump White House. What's the day-to-day and into the weekend mood of the Biden White House?
The mood right now, Tom, is one I would characterize as cautiously optimistic. President Biden, both publicly, has said that he's feeling good about getting his infrastructure packages across the finish line, even after the minor setback earlier this week. Aides behind the scenes feel just as confident as well. So, I mean, there's the caveat that anything can happen in Washington, that the coalition is tenuous, but the mood is overall cautiously optimistic that they'll get his big legislative package across the finish line.
What is the style here? I recall President Obama quaffing a beer on a hot summer day out on the lawn. I vaguely remember that. I think it was a Genesee Cream Ale. That's a quality beverage, Mario, from Western New York. It's not like the beer that made Milwaukee famous. But Mario, what's the method here for the Biden administration? Is it that Senator Biden has a certain rapport, or is there a different approach?
No, you summed it up perfectly, Tom, with the Senator Biden. We have to remember that he's been in Washington for the better part of 4 decades now. He feels very, very confident about his ability to reach across the aisle. And they've tried to really take the temperature down. Whether or not they've been successful in doing so is another question, but the aim has been to take the temperature down from what we've seen over the last 5 or so years in terms of partisanship, and try to at least have a public tone of some kind of cooperation and collegiality. It seems, again, that this strategy may be working if we're to look at what's happening right now with this infrastructure package.
Mario's a Chicago guy, Tom. That's Miller Lite. Miller Lite is the beer of Chicago. Have you forgotten that, Tom?
It's the champagne of bottled beers.
That is the champagne of bottled beers. That is right.
Of the White Sox.
Mario, I know you're a White Sox fan. We'll get to the baseball a little bit later. Let's look ahead to the next couple of weeks. I keep asking this question. It's important. I was told it was about days, not weeks, not months, and it's been weeks and months, and I'm wondering what next week is. How significant is next week, Mario, for you?
Next week is huge, right? So you've got both Republicans and Democrats saying that something needs to get done toward the beginning of the week in terms of a bill text, right? So the setback this week revolved around Republicans balking around about voting for a bill that they hadn't seen the text for. Mitt Romney has said that they're looking at maybe Monday, possibly Tuesday or Wednesday for that to come. But as you mentioned, Jonathan, the clock is ticking, right? We have the vaunted August recess coming up here in the next few weeks. So Congress has to get something done. When we get on the other side of that recess, the clock starts ticking toward midterms when the political risk is escalated.
Are you still thinking that this two-pathway approach on this infrastructure deal is the way that we're moving forward?
No, absolutely. It seems to be that way, Taylor. President Biden has endorsed both tracks. And again, Republicans, while they have balked at the reconciliation path, the Democrats seem to have everyone on board. Now, the challenge for President Biden is pleasing everyone within his party, right? They have that slim edge with Vice President Kamala Harris holding that deciding vote. So he has to keep the progressives in line, the moderates in line as well within his own party. And that's where it becomes more of a tightrope for the president.
It's a backstory this weekend, Mario, but it is part of the Beltway. The president talking about the former governor of Virginia, Terry McAuliffe, is making another run in it. Does the president enjoy going out and campaigning?
Yes, it's in his wheelhouse, Tom. Later on today, he'll be going over to Arlington, Virginia, to campaign for McAuliffe. This is more in the president's wheelhouse. Again, as we mentioned, he's been in Washington for a long time. He's been a senator for a long time. When we're out in the pool with him, he takes a very long time after his speech to do a lot of glad handing, to do the rope lines, taking selfies with people. That's really where his comfort spot is.
Mario, before you go, we won't talk about Red Sox, Yankees. Let's talk about White Sox. Are they getting it done?
I think so, Jonathan. I'm pleased with the way Anderson has been swinging his bat as well. So I'm pulling for those guys on the south side of Chicago.
There we go. Bloomberg's Mario Parker outside of the White House. Good to see you, Mario. Thank you, sir. Tom, do you want to talk about Red Sox, Yankees, or do you just want to move past that?
White Sox baseball, opening day, I believe 1965, can't remember.
Were you there?
The great Nellie Fox. I was there at Comiskey Park. It was the one park that felt like an old stadium. I didn't see many of the others, but it was I'm sure there's an English equivalent, John. It was a magisterial thing from the 1930s.
I think it's sad that some of those old stadiums are going, Tom.
Yeah.
You know?
Like the Toronto Blue Jays are playing in Buffalo right now, and I'm sorry, the old stadium in Buffalo where they filmed The Natural with Robert Redford, again, there's something about those old stadiums.
West Ham fans are not happy about the new stadium.
Yeah, exactly.
Liverpool holding on to Anfield. I think that's what people want to see more of. The fans like it.
You know, and I think AFC Richmond, I just love what they've done.
I'm going to tune in for that. I was teeing you up
Richmond looks a lot like what they did with Crystal Palace.
But isn't that is actually Selhurst Park, isn't it?
I believe
I think it is. All right, I look forward to that.
Season one,
I will tune in just for you, Tom. I promised you I would. Your S&P 500 up 18 points, advancing 0.4%. A three-day win streak into Friday. We could add to that and make it 4. Outside of that, 128.97 on 10s. From New York, this is Bloomberg.
the top about the mission as you see the evolution of fintech enabling what you call democratization. Do you think finance is becoming democratized, truly democratized at the moment? The fact that we're still having discussion about whether you can get in on IPOs, for example, are you feeling that the opportunities are there for anyone to be able to start to make their way within the financial world?
Look, there's always going to be progress to be made, but I think, you know, there are many brands now helping the unbanked and the underbanked, right? I think we've seen a lot of success in where, you know, digital disruption can really help with some of those groups. You know, that's not really our target audience. We do want to offer great advice to everyone, but I think that there are a lot of other folks going after that marketplace. But there's always more progress. You know, there's always more progress we can make. And sure, you're right. You know, in places like private investing, and you know, there are still sort of pockets of the market where, you know, you have to be in the know.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Live from New York City for our audience worldwide on TV and radio. Here's the price action this Friday morning. Good morning. 3-day winning streak into Friday. We can add some weight to this S&P 500. We're doing that right now. Advancing 17 points, up by 0.4%. Nice run on the NASDAQ as well. The NASDAQ 100 back to an all-time high. We could have a little look at an all-time high, a record on the S&P 500 in and around the open if we keep this up as well. Your NASDAQ 100 this morning advancing 0.4%. The Russell up by 0.6%. And the debate right now, we're at a little bit of an inflection point going into the back end of this year, waiting for that data around the September-October period where the additional UI expires, the additional unemployment insurance, and a back to school is set to take place. Will it take place? That's what I mean by this pivotal moment.
Next week's
the CDC
Absolutely.
is really alluding to, Tom. So where do you want to be? Where do you want to be right now? The NASDAQ or the Russell? Stuart Kaiser at UBS, he's going with the NASDAQ into that one. Switch on the board and get to the bond market. Speaking of the unknown, I think this is just the perfect way of capturing it. 29.03 at the close on Friday, on a 10-year, last Friday. Right now, 28.97. Lows of the week Tuesday, 112.60. All over the place on what? No data, no Fed speak, just the market living its own life. And Tom, I have to say that just speaks to the uncertainty in this market right now. The fact you can have a range that wide with no real catalyst, I think tells you a lot.
Let's admit, we had a growth scare.
Do you think we're still in one?
No, but
what
I
kind
think
of
for
growth
2
scare
days,
is that? Okay, Tom.
we had a Delta variant
what
growthy scare.
The growth scare outside of the price move itself?
I think on a global basis, there was a legitimate, normal fear of a growth scare, and once again, by the dip, won out.
Why? Because of the earnings? Or do you think the data's turned? Has something magically happened that growth scare has disappeared?
I'm not smart enough to give you the why on that. Yes, the earnings are visible and all that, but it was sort of like a cosmic thing. You cover that in CFA level 4.
Okay,
like
I'm going to leave that there, Tom. Let's finish on euro dollar in the FX market. Switch up the board and get to foreign exchange. We're going to have a nice conversation in a moment with a man that knows a lot about this FX market and the ECB. I'll keep this short and sweet. Euro dollar 117.55, just a touch weaker. That's the FX market. Let's get you some movers. Big week coming up next week with tech earnings on deck. Good morning, Romain.
Good morning. And we got a little bit of a preview of maybe what to expect. Definitely a growth story, not a growth scare, or at least with regards to some of these social media stocks. Snap earnings, that's really what we want to pay attention to here. This is the biggest mover out there based on volume. It's the biggest mover out there based on percentage gain on the day. Snap having a phenomenal morning right now, up about 17%. This is going to be the best day for the company should this hold, going back to October of last year. And I bring that up because last year was when they had that blowout third quarter where they reported 52% revenue growth. And everyone said, this ain't sustainable. Just don't buy into this. And what happened? The quarter after that, they had sales grow 60-something%. The quarter after that, they rose 66%. And in the most recent quarter, Q3 Q2 that we're talking about, they grew 116%. This is a story not only about Snap, but really about a broader move in digital ad spending that is lifting Snap, it's lifting Twitter, Pinterest, and of course next week we're going to hear from Alphabet and Facebook, and most likely it's going to lift them as well. These are your big movers on the day, and most likely this is what's going to carry us into next week, at least as far as the tech stocks are concerned. Now, there's another story going on out there this morning that I think is flying a little bit under the radar. This is another story with regards to Chinese regulation, and now it involves a lot of the education companies over there. TAL right now down about 53% here in the pre-market. These are the ADRs. GSX Tech2 also down about 58%. All of these education stocks are under trouble right now because of a story out by Bloomberg saying that the Chinese government is actually going to force these for-profit education companies to basically go nonprofit. This would effectively completely neutralize this industry, and is not exactly unheard of. Back in April, the Chinese government hinted at this. It fined a lot of these companies for what it said were unfair pricing practices. So investors had already started bailing out. Remember, TAL was down about 71% prior to today, year to date. But this is having big reverberations for a lot of the other Chinese ADRs, Didi, Baidu, JD.com, Alibaba. Keep an eye on all of those names today. A big story with regards to Chinese regulation.
Romain, thank you so much. To close this afternoon, Romain Bostic, among others, will be there. I do want to point out Euro sitting right on support right now, 117, 1.1759. We'll get to that in a moment. With Vasilios Giannakis, he's Bank Lombard Odier, global head of foreign exchange strategy, and he has a single line in his report that makes any and all lean forward. Vasilios, you see strong Chinese currency, renminbi from a 647 stronger to 6.30 yuan per dollar. Let's start with the why. Why do we see such a strong move?
Well, it's a confluence of things, really, Tom. It has to do with domestic fundamentals. Look, there has been some signs of slowing down, but nonetheless, the Chinese growth is still going to cruise along nicely in the second half of the year. The other thing we have to bear in mind, there are a lot of sticky flows that are flowing into China right now. And this is because of the introduction of a number of Chinese assets into benchmarks. The other thing that's playing out quite interestingly is that Chinese exporters have been sitting into an unusually large pile of dollars over the past 8 to 9 months. And whenever we have had that episodes in the past, which coincided with periods of crisis, it eventually led to a significant unwinding of that big pile of dollars and conversion back into the renminbi. So the confluence of all these factors and the fact that, global trade is spinning out very, very strongly. If you look at global trade volume year over year, it's just rising at an astonishing rate. This thing is meant to normalize. Of course, the momentum is not going to be there for the indefinite future, but nonetheless is going to remain a supportive factor for the renminbi. And on the other hand, you also have dollar overvaluation across a broad range of currencies.
So where does this fit into the euro call right now for you and the team, Vasilios?
Look, I don't think the ECB yesterday is a make or break for the euro. I think everyone was pretty much positioned and everyone was expecting for a very dovish message. If they didn't get it, as a matter of fact, it would have been kind of weird based on the review of the strategy. I think for the very short term, we're going to be in some range trading between 117, 118, 118 plus. But I think the big story here that the market may be mispricing is the rotation of growth from US to Europe. And the reason I'm saying this is because we still have more restrictions in place in Europe compared to the US. And as this COVID situation improves, because we believe it will improve, and we think the UK is a prime example for that, you're going to have the alleviation of these restrictions in Europe. And that is why right now, if you look at the ratio between the Eurozone PMI and the US ISM, is actually rising quite sharply. And we think this is going to be a tailwind for the currency in the second half of the year.
Do you understand the reaction function of the ECB? I get the data, that's the call on the data. I need to understand how you think the ECB responds to it. Do you understand the reaction function of the ECB?
I pretend I do. Let me put it this way. And I think everyone else in the market is of the same reasoning. Look, there isn't really a lot to say about the ECB right now. The reality of the matter is that the ECB is maxed out in terms of what it has done and what it can actually do. Yes, it was a dovish one. It was a dovish press conference. It was a dovish statement, but it doesn't really change anything. And at the end of the day, let's not forget, they've been doing this for the past 6 years or so. And it hasn't really changed that much as far as the inflation is concerned, although we don't know the counterfactual. So it would be a bit naive to believe that it is going to change substantially what's coming in the future. The ECB cannot create inflation.
Coming back here to the U.S., the massive call of 2021 was dollar weakness. Have you seen the dollar weakness behind us for the year?
Well, what has actually changed, I think, and that was something from March onwards. We went through 2 different narratives in the market. The first one was the surprise from the Fed. And the fact that we started having in the pricing in of more hikes in 2023. And the second one was the change in the narrative from inflation scare to growth scare. I'm still in the camp of some moderate, not outside, some moderate dollar weakness. Again, that's largely on the fact that we're still in a growing activity environment. And historically, the stylized fact is the dollar depreciates in periods of growth, even if yields go higher from here. But of course, if we do get into some tail risk analysis and they manifest, be it COVID or something else, then we're going to see some ongoing dollar strength.
Vasilios Giannakis from Bank Lombard Odier, the global head of FX strategy, diplomatic about the European Central Bank and that news conference that took place yesterday. Good to see you, Vasilios. Good to catch up. Thank you, sir. Tom, you and I talked about the division between, say, a President Bullard and a Governor Brainerd. Let's talk about the division at the ECB. We reflected on this a little bit earlier this morning. A story out by Reuters on that division and some of the dissent that Christine Lagarde, the ECB president, had to deal with. And here's the quote. A third policymaker who also voiced significant objections had to leave the meeting early and was not present at the final tally. This according to a source of theirs. That just gives you an idea of the level, the degree of dissent within the ECB right now, Tom.
I don't, I'm a bit of a student of Fed history, John, but I can't recall from McChesney Martin, say 1951, a gap of style that we've seen from Draghi to Lagarde, without any aspersion against either of them. But what a change of messaging have we seen with Christine Lagarde?
I think most people in this market miss the communication of President Draghi. Tom, that's for sure. Bottom line.
Yeah,
and there was a high bar anyway. Let's be clear about that. Could the bar be any higher for the handoff? I think the bar was pretty high for Chairman Powell from Chair Yellen. And Chairman Powell, let's be clear, at the beginning of that tenure, Tom,
it was rocky.
That was not pretty
absolutely.
at all.
It was not pretty. No,
I mean, the man that we heard from at the Economic Club in New York at the back end of 2018 is just a different person compared to the one we hear from
again,
at the moment.
John, I'm going to do a GDP analysis. I'm like, where's the boom in Europe? It's there, but no, it's not.
Yeah, Bank of America asking that question this morning too, Tom. Yeah. The S&P up 18, advancing 0.4%. Yields higher by a basis point or two to 129.64. Yeah. Another beautiful morning in New York City. Good morning to you all worldwide. This is Bloomberg.
With the First Word News, I'm Laura Wright. Talks between the European Union and the US on vaccine passports are making little progress. Bloomberg's learned that's because there's no federal certification program in America. The EU launched its COVID pass at the beginning of the month. The bloc is at an advanced stage of talks on the vaccine passport with the UK. Colony Capital founder Tom Barrack is back in federal court in Los Angeles today. The Trump ally will learn whether he will be released on bail after being charged with illegally lobbying for the United Arab Emirates. Prosecutors say Barrack is a flight risk. His lawyer says he's not guilty. JP Morgan is planning to more than double the number of advisors in its traditional broker business. The bank will expand in wealth management by hiring more than 500 advisors in the coming years. JP Morgan also wants to bring the unit closer to wealth managers who work in retail branches. Wall Street banks have been bulking up the businesses that cater to the affluent. Summer vacations in August may be a travel nightmare in the US. Two major airlines, Southwest and American, cancelled about 3% of their flights the first 6 days of July, while more than 33% were delayed. That's much higher than pre-pandemic levels. The blame's going to capacity constraints, labor shortages, and unprecedented weather conditions. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Billionaires in space?
What defines going to space?
There is a level where you
It's
get
the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Wednesday, the Fed decides. How worried are they about inflation? What will they signal about tapering? Coverage begins at 1:30 p.m. Eastern on Bloomberg Television and Radio.
definitely think that business travel will continue to recover. We're expecting, we were down about 69% with the business travel component in the month of June. We're expecting that that will continue to recover to be down maybe 50% by September and then continue improving after that.
The outlook for these guys is brighter. Things are going to get better. That's the message from Gary Kelly, a taste from the airlines in America, the Southwest Airlines CEO there. From New York City this morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro, together this morning with Taylor Riggs. Lisa back with us on Monday. Here's your equity market on the S&P 500, advancing again, three-day winning streak into Friday, up 18 this morning. We advanced 0.4%. Yields are higher, approaching 130, just south of that level at 129.47. Yields are higher by a basis point or two. Little conversation earlier about the euro. Do you understand the reaction function of the ECB? I'll leave that one open for you to think about. Euro dollar 117.62, down almost, Tom, 0.1%. Just fascinating to hear from the C-suite of the airlines. I've got no idea what the trajectory for policy from this administration at the federal level, at the state level will be to deal with this surge in cases. I know everyone's got their view on what it should be. I've got no idea on what it will be, and what that will mean for these airlines, for mobility of consumers, for individuals, and ultimately what happens to international travel. We were told several days we'd find out. Tom, it's been more than a week.
Southwest Air, it's got to be the official airline of Love Island. Love is up 115% off the bottom. John up 160% at one point. And, you know, they've survived. I mean, that's really what we got to say about the group.
And the benefit there, Tom, is it's a domestic story. For the other players, the likes of United, Delta, American, that are hoping that corridor between London and New York gets going in a bigger way again, they've got to wait.
We will see. Dave Wilson with us now on the equity market. We could have a 4-hour conversation this morning about NASDAQ 115,000. We're not quite there right now. And you're looking at the shifts that have been made as we go into an end of summer view.
Yeah, we're talking about the U.S. versus the rest of the world. Now, there are some people who'll tell you that U.S. stocks peaked in February, depending on what indicators you pay attention to. But if you look at the U.S. in a global context, you get a very different story. What we're looking at here is the S&P 500 relative to something called the S&P Global ex-U.S. Broad Market Index. So in other words, developed and emerging markets outside the U.S. And you saw that ratio between the two indicators drop about 10.5% from a high in September to a low in February. And since then, it's made back the entire decline. It set a record 2 weeks ago. It set another record on Tuesday.
Full breadth into that. All the gloom crew this morning is talking about a lack of breadth out there. Is this comeback in America really the comeback of Amazon, Apple, and the rest of the high flyers?
Well, you can argue that to some extent. Clearly, they dominate the S&P 500, and that's the benchmark in terms of this particular comparison. You know, that said, I mean, you know, U.S. stocks across the board are kind of expensive at this point, whether you look specifically at the S&P 500 or a broader picture of the market. There was a chart that Bloomberg Opinions John Authors had out earlier this week looking at CAPE ratio, so cyclically adjusted price earnings, 10 years worth of results. And the U.S. came up as the most expensive among about 36 markets around the world. So clearly, people's willingness to pay up for U.S. stocks plays into this, too.
Taylor Riggs, I got like 47 people on a Friday morning telling me to go to cash.
Your triple leverage cash, right? Dave, let's not go to cash. Come with us on over to China, because you want to talk about what's trading at a discount. It's China. What are you hearing that is EM ex-China, given the regulatory overhang of that country?
Trading at a discount, that's one way to put it, Taylor. Another way to put it is the government is really kind of roiling the markets. I mean, when you look at what's going on with DD Global, down below $10, a company that was sold last month in the U.S. at $14 for American Depositary Receipt. You have that data security investigation going on. And the latest wrinkle, one that's been coming up for some time, people familiar with the matter saying that China's going to clamp down hard on online tutors. So you're seeing companies like New Oriental Education, TAL Education, Gaotu Tech Edu, down like 50% or more in today's trading, and that's on top of losses that we've seen the last few months. So clearly, China is kind of its own market at this point, and it's one that's really being heavily influenced by government intervention.
David Wilson, thank you so much. Greatly appreciated this morning. John Farrow, I'm fired up about next week on earnings. I've been calling this for months, that earnings are going to be there. Corporations will adjust and adapt. And again, John, I'm not so much starts looking at earnings and the headlines and that, I really want to know what the view forward is.
Apple, Microsoft, this coming Tuesday. The view forward on what, Tom? On the numbers or how they want to approach this surge in cases? That'll be interesting. Apple really led the way on that, Tom, around the pandemic. And we've already had some reporting from our team over the last week that they're delaying the return to office. And I wonder how much clarity we get from Mr. Cook over there at Apple, out of Cupertino.
And also their unique relationship with China. Mark Gurman has been world-class on that for us. And they've got the new products come out and all that. But what do they do with China, both as a manufacturer, the floods part of that debate, and also what do they do with China as a consumer of their products?
So to strip out some supply chain risks, that's the conversation that's been going on for a long time. But I think what you touch on, Tom, is actually quite critical. Many, many investors want exposure to China over a long time horizon. The challenge now is you've got to do a heck of a lot more homework than you used to get exposure to that, given what's happened with Didi over the last couple of weeks. And I'd go further. If you bring up that board again that Dave Wilson was working through, the year-to-date gains, I've been looking at the same thing. The Nikkei, what have you done for me lately? Not much. We're up 0.4%. Take a look at EM, the MSCI EM index. Tom, that has done pretty much nothing either. It's up 2% year to date. This was the trade that was meant to deliver this year. Ex-US, synchronized global growth, and it's just turned out to be far more complex than that. Ex-Europe. Europe's participated, everything else, much, much less so.
John, I just did an eyeball on big tech ex-Tesla in the S&P 500, and it used to be 19-20%. It's now 22-ish%. What do we do when 1/4 of the S&P 500 is 6 stocks?
Yeah, well, I think we've had the conversation now for the last several years, haven't we?
But it's this. It's
what's that?
On radio,
Can you explain what that is?
It's just creeping up.
What is that?
It's creeping up.
I know, but what's this? What is it?
It's a radio signal I use.
Oh, okay. You mean it's getting higher?
It's getting higher.
You mean the stock market's getting higher? Or the weighting's getting higher?
It's very lifty.
Should we work this out off air?
No, we don't need to work it out.
It might be a little bit more beneficial to our audience if we did that off air.
It's like I'm landing an airplane, you know?
Thank you, Tom. That's helpful. Let's work through the price action this morning on the S&P 500, 3-day winning streak. No idea what's going on into Friday. Your equity market on the S&P 500 advancing almost 20 points. We're up by 0.4 Just the range on a 10-year. I know I've been going on about it a lot. You might be bored of hearing it, but I just think it's amazing, Taylor, just to see us down at 112.60 on Tuesday and back out through 130 without much of a catalyst.
And I hate to say it, it's half technicals. I keep hearing it. Half of it's shorts, half of it's some of the positioning coming in. The other half, as we've heard from some of the more cautious analysts, is a little bit fundamental. How much of that was indeed the growth scare, John, on Monday?
It's giving life to a fundamental story. It's always the way, isn't it? You get the price move and then you get the narrative afterwards. And that's always the danger with something like this.
Hey, you've a Swissy 10-year negative 40 basis points. So 130 doesn't look so bad, right?
It doesn't. It looks okay, doesn't it?
Very philosophical on this Friday.
We're just working through things slowly, Tom, teeing up the weekend. Just get in there.
Your weekend
I know that you're distracted watching Ted Lasso already.
Got that right.
What was the first episode like?
Not this year. Last year's first episode was fabulous.
Okay.
You'll know stuff, John, we don't even know.
I'll do that before
There'll
Real
be
Yield.
jokes
How's
in
that?
there.
I'll watch an episode.
I don't get it.
From New York, this is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm Alex Steele. It's a new race into space with billionaires, governments, companies, and investors all driving the industry.
Ignition, we have liftoff. Space is what allows you to see over the horizon.
We're going to see another incredible leap.
The opportunities here are massive.
Join me and Ed Ludlow for Space Race, a Bloomberg Television special report.
Friday on Bloomberg Television and Bloomberg Quick Take.
You have a natural just sort of slowing in sequential growth. You're not going to keep growing at 10%.
We have an economy that's going to continue to grow, but the largest gains may be behind us.
Almost everything has told us here that we're in a regime shift. We're going to now see growth decelerate and inflation decelerate.
Inflation has already risen significantly higher than the Fed had earlier predicted it would.
There might be a surprise out of the Fed. It seems like there are some very hawkish members.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television, a Friday to reset, dare I say, John Ferro, into August, and it is a bull market that will not end.
Another lift this morning, Tom, up 0.4%, and I think we have to look way past August and into next year. We're at an important point, a pivotal point, if you believe the CDC, for the pandemic. I would go further for policy. I would say for the outlook as well. We won't get the answers to these questions, Tom. We won't begin to get the answers to these questions on the outlook until September, October time. Everybody comes on this program and talks about it for good reason. September, critical for the additional unemployment insurance to end, for the return to school to develop. And as you point out, Tom, there's some risks around that now.
Yeah.
And September, October will produce the data that gives people either the confidence to look ahead to a brighter 22 or perhaps the reason to trim their forecasts.
An exceptionally strong hour for you of Bloomberg Surveillance on radio, on television. Peter Hotez will join us later in the hour. Before that, Edward Hyman will join us with his view, the micro data that Ed Hyman is world acclaimed for. And we have Sam Stovall with us with CFRA on the equity boom. In a moment. The color to me, John, is what did not happen this week, and that is the 10-year yield did absolutely nothing if I look back 1 week.
From Friday to Friday, yes, but a lot in between. I've talked about that range from 112.60 at the lows on Tuesday, the highs yesterday afternoon at 131, right now 129.81. That speaks to exactly what you and I were just talking about, Tom.
Right.
The lack of consensus, the lack of a narrative, a story that we can all agree on about the future, or most people can agree on. I think that's broken down a fair bit over the last several months.
Lisa Abramowitz scheduled return for Monday with the travel constraints that I'm seeing within our First Word News. That's up in the air. Taylor Riggs with us this morning. Taylor, your observation on the earnings dynamic that you tear apart every afternoon on the close.
Rohit Kulkarni, MKM Partners, it's a beat and a raise kind of day, at least for some of the big tech stocks. And Tom, we talked about this earlier, just the clarity that we're continuing to get from CEOs. You saw it not only yesterday morning, yesterday night, further perhaps maybe this morning, of the strong forward guidance that we continue to get into this year. I would dare to say it, peak margins may not be behind us.
John, what's fascinating to me looking at the futures, let's do the data now, John. Futures up 20, Dow futures up 188. I've got a near 15,000 print on NASDAQ 100, and the VIX giving me a 16.98 print. John, that's a bull market.
It is. is. And this equity market is close to an all-time high again. It's at a record high on the Nasdaq. At the moment, we're up 20 on the S&P, advancing 4.5%. Talked a lot about the bond market, 10 years south of 130, pushing higher by a couple of basis points to 129.81. Take a look at credit, Tom, and high-yield credit and the issuance that's come through this market. There's a difference between choppy waters and a threat to this bull market. We're talking about choppy waters. We're always thinking about the shark closest to the boat, and often sometimes the storm clouds on the horizon. Let's talk about how strong the boat is right now. Carnival came to market this week and issued 7-year debt with a 4% coupon. Back in the spring of 2020, that was 11.5%. That is a massive turnaround.
Yeah.
And that's a company facing some real risk through the summer and beyond, Tom. I'd go one step further. Think about what that money's being used for. Use of cash. What are they raising the money for? To pay down the debt that they raised at 11.5% last spring. So these creditors, these companies coming to market, they're issuing debt, Tom, at much lower interest rates. They're using it to strengthen the balance sheet as well. And I think that's really important. So when we talk about these risks around this market at the moment,
right,
we're talking about choppy waters and not a threat to the bull market. It spreads wider this week. We had a crack earlier this week. We're still in at around 300 basis points. They're pretty good levels for people to come to this market, borrow money, and as long as that credit market is functioning, I think you can still have some confidence about risk assets. That would be the view of a lot of people.
And then there's the debt constraint, the screen on the Bloomberg, folks, WACC, weighted average cost of capital. WACC is great. John, Microsoft is burdened with debt. How about 4.4%?
They're doing okay, aren't they? Again, of almost 30% year to date on the stock. How many times have we underestimated the ability of that company over the last decade? And they just keep delivering, Tom.
That gives us a good perspective. Samuel Stovall joins us this morning with CFRA, their chief investment strategist. But far more, it is the decades of work across the Stovall family about corporations adapting. Sam Stovall, how are corporate officers adapting to the 2020, 2021 cards they've been dealt?
Well, good morning, Tom, and thank you for that nice intro. Certainly, they have to adapt to what is confronting them right now, whether it's the interest rate scenario, the prospects for inflation, the possibility that the Fed will be tapering, as well as raising interest rates. But probably the biggest challenge right now is what we're reading about in terms of supply disruptions, in terms of cost of goods going up. In particular, consumer staples areas are seeing a tremendous upward push in terms of the cost of goods, and that the real quandary is whether they're going to be able to pass these higher prices on to consumers, either in the form of just higher prices or possibly reduced volumes. But that is something that they're going to have to wrestle with for quite some time.
Sam, we can pick a name, any name, and use that as a data point and example. Chipotle came out earlier this week, and they're pretty confident about the consumer price tolerance on the other side of these price hikes. That's just one name, though. Taylor's been pointing out all week when she's joined us to focus on margins. So let's do that right now more broadly. Do you have the confidence that the price tolerance is there across a range of industries?
I'm not sure that you have a price tolerance across a range. Certainly, a lot of consumers are very forgiving now because they're finally being offered parole from cabin fever. And so they are probably going to be willing to pay a little bit more just to satisfy that need to get out. But I do think that the question is, if this is something that's going to be with us for another year, and that we're really only going to see the year-on-year change in inflation come back below 3% in the second quarter of 2022, that might be a little bit too long in which consumers are going to be willing to be paying higher prices. So I think we could see some pushback.
Sam, dare I ask about who is buying these dips? We had a report out from Vanda Research earlier on Monday saying a 2% pullback leads to a huge rebound Tuesday and Wednesday because you have massive savings rate that's been piling up, and it is that retail investor that's buying this market. Do you agree?
Well, it seems like that is the factor that's been pushing things higher. When your initial question is who was buying on Monday, it wasn't me. My feeling was, I guess I'm getting tired of hearing myself cry wolf, because my expectation was that we are going to challenge the 50-day moving average and then most likely challenge the 200-day moving average on the S&P, because we have gone more than 300 days since the last decline of 5% or more versus the average of 170 78 days going back to World War II, and many other factors in terms of waning participation, et cetera.
Sam Stovall, how do you respond to a serious question of when the Fed finally reins it in, how equities respond? How do you answer that question?
Well, I think the way you answer it is by saying that with enough transparency, I don't think it's going to have that big of an impact on equity prices. Already, we've been hearing a lot of Fed members talk about tapering that's going to take place probably by the end of this year, not beginning of next year, that Fed rate increases will occur by the end of next year, not the beginning 2023. So in a sense, they've been issuing or letting aloft several trial balloons, in my opinion, that are going to be preparing the markets for a more rapid change in monetary policy, and that they are going to go through the tapering process nearly completely before they even consider raising rates. So transparency, I think, will be the key.
Sam, we've had the taper test before. Just quickly, is that an environment where risk assets can still do well through tapering? Do I need to worry more about when we start thinking about reducing the balance sheet?
I think that we can do fairly well. I mean, the last time we really saw something like that, we also had the downgrading of the U.S. debt, which really was the big surprise in August of 2011. I don't think we're going to be seeing something, a repeat of that this time around. So I would tend to say is don't throw us any curves, and the market will be able to set itself up properly to continue to work forward.
Sam Stovall, the CFRA. Sam, it's good to catch up. Stay well.
Sam, thank you.
It's good to see you. Good to hear from you. Thank you, sir. This equity market performance continues, up 20 on the S&P 500 this Friday morning, approaching the opening bell, 1 hour and 20 minutes away. We're up by 0.45%. That Fed decision, Tom, July 28th, coming up next week.
Yeah, we haven't said enough about that. That's going to be an important landmark next week, surrounded by the earnings as well. John, the other story to go to Sam Stovall is the durability of this great bull market, and it reminds me of the character Paul Robinson in The Neighbors. I mean, you look at what Paul Robinson has done across a zillion years of that Australian show, and it just keeps going and going.
That is a great show. Why have you brought that up, Tom?
The durability of the bull market.
The durability of Neighbors.
I don't get it. It's
started
like
in the
Little
mid-'80s.
Britain.
Fantastic program. Do you know Kylie Minogue?
Yeah, Kylie was on it years ago,
That's how Kylie made
right?
her start.
Yeah.
Do you know Margot Robbie?
Yeah.
That's how Margot Robbie made her start in acting. I can think of another. Do you want to keep going through this?
No, I don't want to go through it because I know you're...
I'm told Hemsworth was in it too.
Well, but the knowledge base you have on this, I mean, it's like the old Love Island. I mean,
Yeah.
it just goes and goes.
I'll catch up on that through the
But
weekend,
the
Tom,
length
just
of
for
this
you.
bull market, John,
It's as
is
durable as an Australian
Who guessed,
soap.
John, who would have
Thank
guessed
you.
this bull market where it is?
I'm with you, Tom. A lot of doubters out there. What did you start calling it a long time ago, the most hated bull market ever?
It still is.
Still is.
No, this weekend, you mark my words, Friday by 5 p.m. this afternoon, there'll be 7 doom and gloom articles out there.
Up 20 on the S&P, advancing
I'm
again.
comfortable in
Up
cash.
4.5%. I can tell. You sound really happy this morning.
I
From
wish
New
they'd
York
make
City.
a longer episode.
Alongside Tom Keene, I'm Jonathan Ferro. Futures positive in a beautiful New York City. Good morning to you all. Just ahead of the long weekend, if you can get out of work early this morning. Hopefully you can. I'm going to try and do that, Tom. You're going to anchor real yield a little bit later this afternoon. They told you that? You've just found out. This is Bloomberg.
With the First Word News, I'm Laura Wright. A bipartisan group of U.S. senators is closing in on a $579 billion infrastructure deal. They agreed to pay for it in part by delaying a costly Trump-era Medicare regulation. Details won't be announced until at least Monday, and any deal could face opposition from Democrats in both houses of Congress. A new survey says the Fed will start scaling back asset purchases next year, and policymakers are likely to put an emphasis on mortgage-backed securities. Economists surveyed by Bloomberg see the Fed raising interest rates at a quicker pace through 2024 than previously thought. Most also expect Chairman Jerome Powell will be nominated for a second term. Some promising news about Pfizer's coronavirus vaccine. Israel's health ministry says it provided a strong shield against hospitalization and more severe diseases in cases caused by the Delta variant. But the vaccine was only 39% effective in preventing infections. The data is likely to fuel debate over whether booster shots should be given to people who've already been vaccinated. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astacoma carinata.
I nailed it.
It's not thera, whatever. Astacoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
Biggest debate happening in the business world right now is how to get workers back to work and what benefits to give your employees. Microsoft is asking employees to be back in the office 51% of the time, but you're flexible about the rest of the time. Is that a permanent policy? And for those companies that are saying you have to be back in the office 100% of the time, are they on the wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we're trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think as you look at earnings going forward for companies, you have to take into account input costs going up. It's a clear area where there are some challenges today, and our instinct is this will persist for some time.
Can they pass on those higher costs? The big debate in the C-suite. for corporate America. John Gray there, Blackstone president and COO. From New York City this morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro, together with Taylor Riggs. Lisa back with us this coming Monday. Going into the weekend with your equity market elevated on the S&P 500, a three-day winning streak that could turn into four, up 20 on the S&P. We advanced by 0.46%, a lift on a 10-year yield by a couple of basis points to 129.64. The euro unchanged at 117.70. Outside of that in a commodity market, almost $72 a barrel on crude, just south of that level at 71 and around 75. We're negative, Tom, 0.2%.
On a Friday, John, we begin our coverage of technology. We will do that into next week as well. And we start strong with Anand Srinivasan. He's with Bloomberg Intelligence, a senior analyst, years at Lazard, at Merrill, and what you need to know is truly one of the most careful thinkers about this juggernaut that's affected all of us in society. Anand, thank you so much for setting up next week for us. How big can these things get? Right now, let's say the top 4, 5, 6 companies are 19, 20% of S&P 500. Can you envision them out to 30% of the Standard & Poor's 500 index?
So that's a great question, Tom. It kind of depends on what the rest of the S&P 500 does too. But I can safely say that there's some growth ahead for companies like Apple. Demand doesn't seem to be sort of weakening at all. If anything, supply constraints are having them leave some revenue on the table when they ship product because they're not able to get it all. But we're expecting a great quarter and a great fiscal year for Apple, and we think that demand sticks around for a little bit longer.
How do you respond in casual conversation, and I don't want to get into buy, hold, sell here, Anand, to someone who says, for example, Amazon, they've got to break up the cloud and the cardboard box. How does a pro like you respond to that?
Well, I lean on my antitrust colleagues, Jennifer Rees specifically, and one of the things that she says is you can have a monopoly as long as it's organically built, right? So when you stifle competition and you take away sort of opportunities with other companies to expand, that's when you get into a sticky wicket from a regulatory perspective. But you have to be able to, we've had smaller companies potentially compete with Amazon. They just haven't had staying power, and able to compete as broadly and as diversely with Amazon. So on that aspect, there's more to the story than just, a simple breakup. It's not that easy.
Well, let's work through it. Let's say it was easy and they could do it. Would that be bad for these companies, Anand? Could that actually work out for them?
There's merit on potentially separating out the cloud business from the retail business. Again, Amazon is covered by my retail and software colleagues, but there is merit for cloud potential expansion, right? So one business is really high margin, really fast growing. The other one is large revenue, but potentially much lower margin. So there is merit to the argument that you could potentially separate it. But again, Amazon's a bowl of wax that's left to my retail and software colleagues.
And on back to Apple, there's a goal of cash neutrality, and I'm wondering how you get there when you're sitting on $200 billion of cash and only $120 billion of debt. And so net cash, you're still at almost $100 billion, and your free cash flow is $100 billion a year. How do you get to cash neutrality?
You don't, is the short answer, particularly if you take into account their M&A strategy, which is really small tuck-ins, Taylor. So cash neutrality is a nice goal in theory, but we don't see them getting there anytime soon without large acquisitions. And there's merit to the case that if you buy something like an NFL Sunday Ticket, large media content purchase, or a couple of studios in the media space, you can seriously add cloud to your services business, which they need, to be quite honest, on the media side. So you can expand in that area, you can reduce cash, and you can set up the business for the next 5 years. But they haven't done that thus far. And, even projects like, their silicon expansion, potentially, Apple TV, et cetera. Those projects don't cost that much from an R&D perspective. So cash neutrality not going to happen anytime soon.
What I hear, not always from you, and I think of the great Mary Meeker as well, is a migration to the cell phone. And all these companies, the common theme is our changed behavior. We've got Ted Lasso rolling out today for Apple Plus.